Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today is Tech Tuesday. Plus, I maintain a vigilance on the great credit crunch and slumping gold and crude oil prices. My first blip looks at the daily and monthly charts for the NASDAQ and Philadelphia Semiconductor Index, the SOX. The daily chart for the NASDAQ shows an overbought condition with Monday's close below the 200-day simple moving average at 24.28. The 50-day is support at 23.46. The monthly chart for the NASDAQ shows declining momentum and a close below the 120-day simple moving average at 22.85 would risk a multi-year bear market. The daily chart for the SOX also shows an overbought condition, and the recent rebound stayed below its 200-day simple moving average at 379.88. The monthly chart for the SOX shows an oversold condition with the 120-month simple moving average as resistance at 496.09. You can't have a bull market for stocks with a bear market in semis. Note that the SOX failed at my semi-annual resistances at 378.50 and 381.45. My second blip looks at the daily charts for Apple and Google. Apple is overbought on the daily chart and is above its 200-day simple moving average at 163.96. The recent high was just shy of quarterly risky level at 180.95. Google stayed shy of overbought territory, well below its 200-day simple moving average at 558.37. The August 4th low of 461.90 is the stock support. My third blip is my daily update on the great credit crunch. The 5-year Fannie Mae widened by 8 basis points on Monday to 103 over the 5-year Treasury. This spread was 50.8 basis points at the end of 2007. The 10-year Fannie Mae widened by 7 basis points on Monday to 88 over the 10-year Treasury. This spread was 51 basis points at the end of 2007. The housing bill was supposed to restore confidence in Fannie and Freddie, but it has not. In my opinion, the housing bill was the worst legislation ever passed by Congress, and any incumbent up for election this November should lose their job. Look at the chart for Fannie Mae since May 7th when I called for nationalization, down from $30 to $6.15 at Monday's close. My fourth blip tracks the daily prices for COMEX gold, NYMEX crude oil, and the weak euro. The daily chart for gold is oversold, with gold well below its 200-day simple moving average at 890.9. Weekly closes below my semi-annual pivot at 796.5 indicate risk for my annual support at 729.5. The daily chart for crude oil is also oversold, with the 200-day simple moving average as important support at 110.36. Annual supports at 78.40 and 76.30 remain my target by early 2009. My annual support is 1.4174 with a 200-day simple moving average at 1.5298. That's for the euro. So weak euro, weak oil, weak gold, weak economy. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.